All right, Jeremy, it's top of the hour. Are you on with me? I may have to unmute you, Jeremy. Hold on just a second. Sorry for the technical difficulty, people. I need to get Jeremy unmuted.
Can you hear me, Chris?
All right, Jeremy, you in now?
Can you hear me, Chris? How about now, Chris? You got me?
We can hear him. He keeps asking you if you can hear him.
Oh, hold on just a second, then. Maybe it's me. All right, I should be able to hear.
How about now, Chris? You got me?
We good. We are just fine. Thank you. How you doing, buddy?
Doing pretty good. How about you?
I'm doing good. I'm doing good. Sorry about that. You figured that you got a guy who's not a very technical person. He's going to mess something up, even he tested 50 times over.
I'm just glad you're in charge, right?
Hey, you know what? I don't even know if that's the case. I mean, I'm really feeling that's not that we're not there really. Is it really me? So let me tell you something. Why do I get excited about doing this? Why am I excited about talking about taxes, Jeremy?
Well, I mean, we are about to experience significant change no matter what happens here.
You think? You're not the only CPA on the call, so we are all well aware of that. And yeah, I've been fired up all day. I know we talked about this weeks ago, and basically we're saying that look, it's uh I mean, not a lot of tax conversation has come out as far as specifics to some degree, at least not in mainstream media. There's been some snippets every now and then, but there's been a lot of confusion. I think you said, I know I have gotten a lot of questions from clients with some of these
Mhm.
topics. So, and I'm well aware that this is not going to change most people's opinion on what they're going to do on election day, and that's perfectly okay. I just think it's fair that we just, for those interested to learn a little bit more or to verify some facts, and these are all pulled from credible sources. These aren't pulled from, the Facebook pages and things such as that. We've actually done the research and try to come up with what we see as each of these candidates has or would like to put into policy. Is that fair?
I think so. And you said there's not much information out there. And what's difficult about this kind of stuff is the information that is there can be very hard to interpret. And it both these days, people seem to be able to change their opinion on a dime, which is not necessarily a bad thing, but it can be tough to know what's actually going to happen if one or the other gets elected.
Right. Well, that's true. And as we are have mentioned in when we release this invitation to anyone who's on, this is a very unbiased conversation. You good with that?
Absolutely.
Whether you're red, blue, or purple. And I wore purple today to be in the mix of the two. I did intentionally, believe it or not. See, I told you I was fired up by doing this today. Also, we are recording this, as you well know. You saw that the recording is on. So once we get the recording, I have to run everything through compliance to make before we release an audio or video. And I'll send this out to compliance later today, late this afternoon, and hopefully have it ready to be distributed maybe in a few days. If anybody wants a copy of that, please let me know, or have friends and family or other clients they have they want me to send it to. Happy to do that. We're also, I can send this slide deck to anybody interested, so you can contact me for that as well. We have turned off, at least I think so. I'm not the tech guy. Obviously, we know that's a problem already. Questions. So chat room should be off, as well as ability to ask questions. You should be hopefully muted. If you're not, please mute yourself. And but we're not allowed to do Q&A on this call. If you will have our contact information to discuss with us anything that you like to. So if you want to reach out to Jeremy or myself, Jeremy, I prefer just them if people email me if they have
Absolutely.
questions or want the slide deck or anything like that. What's your preference?
Email is the best.
Okay, agree, because we can answer that throughout the day and hopefully not play phone tag with you, because we don't want to do that if you're reaching out to us trying to get answers. So let's get started. We're going to try to keep this to 30 minutes if we can and not go too far off track from the slide presentation. But we will. So we're going to do a comparison. Jeremy and I went through and picked 4 or so of the main topics that really we get questions over from clients, friends, and family. I know there's a lot more tax things we could talk about. We may just in each of these, we may go a little bit deeper into something, but we're going to cover at least on the personal side, the corporate and business side, the estate side, and the capital gain side. Okay. Jeremy, any thoughts or other comments on that?
It's just trying to hit the big points that are actually
Yep.
going to affect people, day-to-day life.
Yeah. So, and as we know too, just because a politician, as always has been, stumps on a particular topic of what they would like to do, it does not matter. Well, it does matter, but it may not pass, right? So it still has to go through a process to become law. So just keep that in mind. Even though a politician maybe says something on one side of the fence or the other that either makes you happy or upsets you, it still has to go through a process. So it's not necessarily because of what they want to do; it's 100% going to happen. So we will go through each of these again in a little bit more detail. So these are on those different levels or different topics or policies. These are some of what former President Donald Trump has proposed. Jeremy, any comments on any of these before we go
Yeah.
deeper on the president or former President Trump's?
Yeah, a lot of this is kind of what he already did, lowering the corporate tax rate. This was part of the Tax Cuts and Jobs Act of 2017. He lowered the corporate rate from 35% to 21%. He jacked up the standard deduction for everyone. He In 2017, he essentially doubled the estate tax exemption, which I think Chris is going to talk about a little more. And it sounds like he wants to eliminate it altogether. We'll see. And then, repatriation of offshore profits, for trying to spark companies to bring money back onshore.
Right, right. And as Jeremy said, each of their policies are significantly different to some degree, because as we look at Vice President Harris's tax policy, and again, we can't lay these side by side either, Jeremy, because they're kind of like what's more important to them or their constituents on each side. They focus a little bit more effort to, and to put a little bit more resources in as far when they're stumping. So here are what we're looking at with Vice President Harris's tax policies. We'll cover a little bit deeper.
There, Chris.
That wasn't me. Our office seemed to have lost internet connection. So I did nothing wrong on that one, people. That was not my fault. I'm letting you all know right now that was the office. It seemed like my office had lost connection. So hold on just a second. We'll get back in this. Hopefully we're going to get back in this. We'll stick here for a minute until the system. Can you see? Are we back on sharing the slides, Jeremy?
Yeah, I can see. I can see the slides.
All right, good. So, Vice President Harris's policies. We'll talk about capital gains a little bit more, and I'll cover that one with Jeremy's input. Wealth tax is going to be a state tax, so Vice President Harris tends to call it wealth tax instead of a state tax. While former President Trump calls it wealth tax. Then Jeremy's going to talk a little bit more about earned income tax credit once we get to that slide. Still can't get that, but we'll fine. We'll work off of this. So on personal income tax policy comparison, Mr. Jeremy, I'm going to let you handle that since
Yeah,
really
sure.
most of these are all tax. So most of this is really in your wheelhouse anyway as a CPA, but you definitely need to, this is more your expertise than mine.
Sure. And the biggest, starting with former President Trump, the biggest thing he's looking to do is make permanent the Tax Cuts and Jobs Act. Currently, those provisions passed and enacted in 2017 are set to expire at the end of 2025, which is really why we're having this presentation. If Congress does nothing, there's going to be significant change, and they're certainly going to do something. And so each candidate has pretty radical plans, or radically different than the status quo plans to try and fix things. So Trump will make permanent, the cuts that we, enjoy now. He's also talked about removing the cap on state and local tax exemption. So currently, you're capped at $10,000 on state and local taxes paid for your itemized deductions. And he's talking about removing that cap, which I know will significantly impact my clients. I feel like that one will touch a lot of people. A couple of the other more radical things he's talking about are eliminating income tax for tipped wages to employees, which, for people in the restaurant and hospitality industries, that will be a huge pay increase if they can avoid payroll and income tax on those wages. He's also talked about doing the same for overtime wages, as well as removing tax from Social Security, which currently can be taxed at 85% if you earn enough. These are all, these essentially are tax cuts geared to, lower income earners. And I think we'll have a significant impact on those. And I think we'll have a trickle down effect on the business owners. One thing neither candidate has talked about yet is currently business owners can take a tax credit for tipped wages paid to employees for the taxes paid on that. Well, if tipped wages aren't taxed, what happens to that tax credit? And we just don't know. Let's see. I think those are the high points on what Trump is talking about. He's also talking about increasing the child tax credit. Just looking at my notes here. And essentially, as some of you might be wondering, is how are we going to pay for all this? He's generally talking about paying for it with tariffs, because these are significant tax cuts across the board. So we'll see how that plays out. Again, what these policies start off as, once they make it through, 500 different members of Congress and 100 in the Senate, it's who knows what they'll look like.
So do you see anything from what's being proposed now that we know of that could adjust between whoever wins office? Have you seen any, proposals and actually trying to implement the policy are two different things?
Sure. So how do you mean?
So do you feel that let's use Vice President Trump or former President Trump, for example, with what he's proposing, do you feel that's going to be his stump and his stance going forward if he wins the election?
I think at a very minimum, what he's probably going to push for is extending the tax cuts or making permanent the tax cuts. Let me walk that back. I see one of two routes. He's all about the tax cuts he's already implemented. It's easy. We're familiar with it. It's current law. So either making those permanent or extending those plus adding in some tweaks, I think is what he's probably going to go for. So with Trump, I think on the individual side, it'll be more of the same with a few small tweaks here and there. And the tweaks he's talking about do sound like they'll be more beneficial for taxpayers.
Okay. Okay. And just remind everybody, to anybody who jumped on a few minutes after we got started, we'll be taking questions and answers directly through emails to Jeremy and I. So that's why chat room is off. I had a separate email come through for that already. All right, let's go into then corporate. So Jeremy, I'm gonna let you handle this as well, the comparison of the corporate tax rate policies.
Yeah, so the corporate rates, there's neither candidate are talking about too significant of change. Trump wants to lower the rate slightly from 21 to 20%, with another 5% knockoff if you make all of your products in the US. I'm not really sure what that's going to look like or what that policy will be. I'm going to guess the threshold or the hurdle to clear for that 15% rate is probably going to be pretty stringent. Um, and then on the other side, Harris wants to increase the rate to 28%, still less than it was pre-Trump at that 35% levels, but it's just a slight increase. There are also a number of changes Harris wants to do on the very, very high end of corporate taxes. We're talking publicly traded companies, things that I don't see on a day to day.
Right.
Stock buybacks, and well, one significant one that might be more common is she wants to eliminate the deductibility of wages for employees making more than $1 million in the corporation. Again, so there's not many of those, but it will impact some companies significantly.
Well, that's going back into looking back at the personal corporate, and we'll follow through with some of the other policy topics. And she has said this in her campaign is that it is a tax in what she feels and her party feels are the wealthy. I mean,
Exactly.
so what they're coming out with on everything as far as a higher tax percentage it tends to impact a small percentage of the clients that even Jeremy, you and I probably see on a day-to-day basis.
Absolutely. And on the individual side, I guess I kind of skipped over Harris's policies. We will likely not see a continuation of the Tax Cuts and Jobs Act. I think we'll see some form of it for people making less than $400,000. That seems to be the dividing line they're drawing for high income versus middle income.
Right.
But I think if you're below that threshold, things will be different, but the impact will probably be more or less the same. And above that line, things are going to change significantly.
Okay, good. That's fair. It's completely fair. So after corporate, let's look at just the business owner tax comparison. As a small business owner myself, I have lots of questions on this one with any candidate running for office.
Yeah. So again, Trump would if he extends the TCJA, Tax Cuts and Jobs Act, you will continue to benefit from the qualified business income deduction, which is what that first little bullet point is talking about. That deduction effectively takes the top tax rate on your business income from 37% to just under 30%. That's a huge deduction for nearly all small business owners. It's a big deal, and if that went away, it would hurt pretty badly for most of my clients. Now, I have not heard her talk about continuing that, so I think we would have to assume that would go away or at least change significantly if she were to make it into office. But she is talking about extending a lot of tax credits for businesses that invest in rural and impoverished areas.
Mm-hmm.
She's also suggested a change to your startup cost to try and currently, if you start a new business, you can only expense about $5,000 of your startup cost, and you have to amortize the rest over a period of time. She wants to raise that to 50,000 to maybe make it a little easier to start new businesses in those areas. Otherwise, there's not a lot. The big change here is the business income deduction. That's really the hot topic, and who knows what Harris is going to do with that.
Right. And that's one I've read. I feel just in the press I've read about that is that that will be a push to keep that in place regardless. So it's kind of going back to what policy is being pitched or what we don't know. I mean, and that's a lot of why we want to do this too, because there's a lot of just what we don't know. There's not been taxes as far as a campaign topic, a policy topic. It doesn't rank in the top two or three. It's other policy issues or other issues the candidates are stumping on that's more concerning to the population, the voters. So obviously they're going to lean there. So they kind of have waned on not really going too much deeper into their tax proposals, it seems like.
Well, and they're certainly not going to get this far into the weeds and talk about a qualified business deduction. They're more talking about taxing million and billionaires
Right.
and earned income credit for wage households. Those are the hot topics.
Well, what's going to hit the front page of the paper, right?
Right.
People don't get excited like I do, apparently. I don't understand that. So next we'll slide over into either call it estate or wealth tax, depending on which candidate you listen to. And this is kind of obviously it's in Jeremy, your wheelhouse as well, but it's definitely one of mine and what we do in financial planning. So, and again, reminder for question and answer, you can get back with us on an email later with these. But I mean, it really comes down to taxing what the parties are feel are the wealthy. Okay, so I've called a wealth tax also. Right now we do have the act that pushes up the estate tax exemption. So today, the estate tax exemption for 2024 is 13.61 million per individual. All right. So basically, a couple now, if they were to pass away, they have $27 million that can be exempt from an estate tax at this point. Now, if that goes away, if that act, if Vice President Harris wins and that act does go away, and nothing's proposed to change, it's going to drop it back to 6 million per person. We believe sunset around 6 million per person, or 12 million for a couple. And Vice President Harris has come out and proposed reducing that even further to around 3.5 million per person. So that means 7 million for a couple. So that's a significant difference for somebody who has high wealth, a lot of real estate, business ownership, things such as that may push their estate into the 30, 40, $50 million plus level. So 7 million compared to 27 million is a big number, right?
It is. And actually just today the IRS released the inflation numbers for 2025. That exemption goes up to 13.99 million.
Thank you for adding that because I did not see that today. That's why I need you, Jeremy. That's why you're here. Keep me in check. I'm trying to figure out how to work the computer. All right. So obviously I get questions all the time because we're working on the states religiously and we're states that are much less than these numbers. And today there's not a lot who have in my client base, our firm's client base, who have net worth in a state that's over 27 million. However, they more will definitely fall into it if it drops to 7 for a couple or 3 million for an individual.
Absolutely. And now I just read this today, and Harris's 80+ page tax proposal. She's also talking about trying to push through a tax on unrealized capital gains, which would just have devastating effects for a lot of people that just don't plan for those types of things.
Yeah, and there's some things cooked into this too. There's some, it's kind of like there's some things in the stew you don't know about. There's some things that are in this it goes down to what you just step up, all kind of stuff. So we'll have to pay attention to that. And obviously, regardless of who wins office, we're gonna be Johnny on the spot as a firm. And I know all my CPA friends would be exactly the same, trying to make sure that we're protecting our clients the best we can when this again, it has to be approved. It can be a policy that someone wants to happen, but it has to go through the proper channels to actually be implemented. So we make plans. We don't overreact until we know for sure. I promise you that. All right. Next, you mentioned unrealized capital gains. For just capital gains side of things, I have heard that Trump wants to cap the highest rate around 15% potentially. I know that there's people in the party who do. Right now it's at 20%. Jeremy, correct me on any of these numbers if you feel like I misstated anything, since it's more of a CPA conversation as well. And then when we're doing capital gains work for our clientele, we're including our CPA partners and helping determine a lot of this, so you know that. But managing investments and financial plans for families, we have to pay close attention to this. But right now, I'll do married couple. Let's do the tier for married. So at married is 0% short-term, not long-term. Short-term tax ordinary income. So long-term cap gains is 0% up to 94,000. Is that fair?
Yep.
Get my numbers right. 15% from 94,000 to almost 584. Okay. So basically right there for anyone who has short-term capital gains, long-term capital gains, anyone having long-term capital gains less than 583, the cap is 15%. Fair comment?
That's right.
Above 583, it jumps to 20%. And so it is a tiered structure, short term, ordinary income, long term at those tiers, which is why we talk to clients about if we can hold off from taking short versus long term. That's of course what we want to do. Well, of course, so Trump wants to continue as is or possibly drop the top rate down to 15%. He hasn't and correct me if I'm wrong on that. He hasn't commented a lot on these numbers as far as I can tell.
He hasn't. It's been broad generalizations,
Okay.
and he has thrown out the 15% number a few times, but
Yeah.
I haven't read that anywhere. I've only heard it.
Okay, that's fair. And so Vice President Harris, in the difference is that she was proposing that long term, remember that or top rate. I said a minute ago that long term top rate is 20% above 584 for a married couple.
Mhm.
She was proposing taking that to 28%, but instead of 584, $1 million. Is
Mhm.
that correct? So I'm
That's right.
assuming that 15% tier then would go, of course, numbers can always change. I'm assuming that would go from 94,000 to $1 million at 15%, and then anything over $1 million would jump to 28% unless she adds another tier.
That's right. And again, I think the point here is that the top number would likely increase to 28%. The threshold for when it would kick in, I think, would be at least a million. I think that number probably goes up a little bit by the time it makes it through, if that proposal even makes it.
Right.
But I think you could bank on at least, at worst case scenario, paying 28% on gains over a million.
Okay. And so I do get, and this one is one I have a lot of conversation about with. These are just the friends and family conversations around a football tailgate or, a night out at a couple's dinner that they're concerned about their capital gains having a huge jump in percentages. But I promise you that my family is not making $1 million in capital gains per year. Let's just leave it at that.
Right.
Unless they're hiding something I do not know, and then we want to go back to estate tax because there may be something coming to me at some point I have no idea about. So that we may need to address that as a family.
No, you got to think that that's really going to kick in on the significant life events like selling a business,
Correct.
selling property. That's when that's really going to hurt.
So we didn't want to bore everybody. So we want to keep this to a few topics, give you the information that we had available. Hopefully maybe spur some interest in you to learn more about that. Again, not change any views on what you feel on your political direction. That is not the point of this at all. But what Jeremy and I definitely wanted to touch on lastly is that regardless of Jeremy, what happens, okay, who wins office, what policies they've been talking about, they're going to try and push through while they're in office and potentially get past. Our job, yours and mine, is to make sure we plan around these events.
Exactly. And not overreact based on rhetoric we're hearing now. Because no one knows what's going to happen in early November, and no one knows in January what's going to happen when we have a new president.
That's correct. And overreact is a huge point. We're not doing some sophisticated estate plan wealth transfer changes today because we just don't know yet. But there are things that you and I can do to help people make smart decisions so they don't get caught in these traps.
And making sure everything is optimized based on current law in place.
Right.
There's tremendous planning that nearly everyone can do to make sure things are optimal for tax savings and for planning for the future. And as you were saying, nearly all of this can be planned for. We just have to know what's going on and what's happening.
Yeah, well, if you fail to plan, that's when you get trapped. So, and that's why reviewing, like you said, Jeremy, staying current with tax laws as they change is, that's your tax review every year, tax strategy every year. That's your estate plan, asset review, net worth review every year. Just making sure that there's nothing going to sneak through, that if there's a life event that happens to you, that you either chose or did not choose, worst case scenario, that we've done our job to help you avoid some of these potential tax traps.
Absolutely.
Okay, that's fair. Jeremy, buddy, I appreciate your time being on this with me. I appreciate you allowing me to talk you into. I didn't have to talk you into this. I'm kidding. You do great. I mean, we're Jeremy and our friends, and it's just easy to have a conversation about this. This is what we can do. when we don't have an audience in front of us is sometimes better because I don't have to worry about the technical issues. So thank you for a lot people on this, allowing the tech problems to not to not mess this up worse than it could have been. If you and for me again, if you want to reach out, that's my email address on the screen now. Please email. I can send you this deck if you want. Jeremy, same for you, right? Email that you have any questions
Absolutely.
or concerns. We're happy to
Any, que-
help the
yep,
best we
any
possibly.
questions, just shoot me an email.
Yeah, that's great. Jeremy, thank you, my friend, and everybody who's sat through this. I appreciate your time and God bless. Thank
Thanks,
you.
Chris.
Yes, sir.